Well, global economic growth prospects are confronting a unique mix of headwinds, from interest rate increases in hopes of containing inflation to lingering pandemic effects on China's recovery. But what could a slowdown mean for some asset classes? We are zeroing in on a couple of them this morning, in particular the U.S. dollar. The strength behind that currency raising concerns for investors and sending Asian currencies to monthly lows. But the dollar continues to rise on signs that the U.S. economy is improving here. Brian Sazzi spoke to Jan Hatzius, Goldman Sachs chief economist, on why he believes we'll most likely avoid a recession.
I think there's increased evidence that we can see rebalancing of the economy, inflation coming under control, and it's not going to require a recession. So we've progressively reduced our recession probability. We had it in the 30%, 35% range around March, when you had the financial turbulence and the banking turbulence. Always thought that it was less likely than 50%, but I've gotten incrementally more confident that recession can be avoided.
Well, apparently he's not the only one, right?
Yeah.
Because we have seen that sentiment really shift this year towards being more optimistic on the economy. And that is definitely one of the things that has helped support that strength in the U.S. dollar.
Yeah, and one of the interesting things in the correlation between inflation, of course, and relation to a recession, but inflation also to the decline in the dollar. There was the thinking earlier this year that U.S. inflation, if it continued to at least abate here a little bit or, decelerate, that it would further a decline in the dollar. We're continuing to watch more economic data that comes out that shows that inflation, even if we are continuing to see some type of cool, that the dollar for right now, in the rise that we've seen most recently, the larger question being where other assets and where perhaps in the riskier realm of some of those assets would there stand to be some type of benefit? And that was what many investors over the course of early this summer were paying close attention to, a rise in some of the propensity for those risk assets, given the weakness that we had seen in some of the dollar. But as of right now, I think for where we've seen the inflation picture continue to kind of show itself, at least in moving back towards a decelerationary phase here, I think for a lot of consumers out there, they're looking across what that means for a recession and just trying to figure out, okay, if this means soft landing, can I be confident in how much I'm going to spend, or what some of the larger purchases that I can feel more confident in spending on right now is? Well, it's not a house, and it might not be a car as well here. Right. But that all in relation to how strong or weak the dollar has been moving even over the past 2 months.
Yeah, so the dollar, forget about consumers for a minute.
Sure.
The dollar has important implications as well for other countries and for companies. If I'm a company and the dollar is strengthening, that means that there are implications for me bringing my overseas revenue back to the U.S., right? And the value of that not being as strong if the dollar is stronger than those local currencies. And there are also implications for other nations, because if the dollar is strengthening, conversely, their currencies are weakening. Japan in particular seems alarmed about that. An top currency official there saying that Japan is ready to take action amid some of the speculative moves that we've seen in the market. The PBOC in China as well, the central bank, they're also talking about that issue and issuing some stronger guidance for its reference rate for the yuan. So a lot of different implications here when it comes to what's going on with the currencies globally. Yeah,
and another asset that we are watching this morning is oil. We're watching this closely as a clear driver for inflation globally. Oil jumped to 10-month highs on Tuesday after Russia and Saudi Arabia announced supply reductions intended to keep crude prices high. One of the huge kind of parts of this as well, the price of Russia's flagship, we've been watching that here, and that has continued to be above some of the G7 price caps. That particularly has been of note, especially as Russia is continuing to kind of move forward and monitor, or say at least that they're looking to stabilize prices. But price stabilization for them is something that's a little bit more detrimental for the rest of the world.
Yeah, the dynamics in the oil market recently have been really interesting. We were just talking about the strength in the dollar, which traditionally has not meant strength for commodities and oil prices in particular. But the oil has been strengthening lately, and WTI in particular is up more than 20% this quarter thus far, on track for its best performance since the first quarter of 2022. So we've seen that strength. Now a little bit of a pullback. There are some potential indications that oil is getting a little stretched or a little overbought if you look at momentum indicators. Brent that we just saw, so we were showing Brent and WTI, Brent below $90 for the first time since last November. So after this climb that we have seen, a little bit of a pullback occurring today, even as some of the analysts who watch oil that we've talked to say they don't expect oil necessarily to fall much further, even with some of the global growth concerns surrounding China.
Yeah, and for China, the oil demand has not been or held up as strongly as many would have anticipated with the growth projections that were set forth at the beginning of this year. So that also having an impact because China not purchasing as much from some of the other counterparts or global, and specifically Russia, purchase agreements that they had set forth or at least discussed last year amid the ongoing invasion of Ukraine, and then this relationship that furthered itself between Russia and China as well.
Right.